All right, guys. Well, I have a great topic for us today. Is the rotation away from Nvidia actually going to happen? And to get to that answer, we're going to expose a lot of Wall Street narratives that I know a lot of you guys have heard before. Of course, there's some truth in there, but there's a lot of just falsehoods and a lot of ridiculous misdirection as well. So let's break it all down today, piece by piece, and I'll give you guys the real answers on each. Just make sure you like the video if you like getting the truth without the hype. All right, so I found that I was kind of it's fast moving, but don't worry, we're gonna break it down piece by piece and show you how they kind of mix truth with a lot of conjecture and sometimes just straight falsehoods to kind of create narratives that kind of get you to move out of great positions, to kind of get you to kind of go the way that they want you to go. So we're going to expose that right here today. And I'm also exposing one of the biggest discounts ever for my group. Make sure you check out the pinned comment down there. The sale ends on July 4th, which is going on right now, where you get 5 courses free. You get access to free coaching. You get to be a part of the best 6, 7, and 8 figure Discord out there. You can talk to me directly, either through DMs on our live Q&As about a lot of narratives just like this. Again, we had another narrative come out this week. I put out a video about it just to my group there to kind of address that. This is exactly what the group is intended for, to kind of go that next level that we can't go here. So make sure you check out the pinned comment, see if a membership's right for you. All right, so let's jump into the video here and let's have a little bit of fun today, and of course, learn a whole lot as well.
Day here on the concentrated Nvidia trade, but still needs to go a little bit further because this is a market that likely only has a couple outcomes. First, let's rewind. The yellow light on my risk radar came on a stocks, dropped the green light on the 14th, which was about 7 trading days ago. So not the worst timing, because part of it was that we had such a big valuation run up in the big tech and the AI trades. That's number one. Number two is that if we're going to lose the strength of Nvidia, the idea of this ex-Nvidia rotation just doesn't resonate with me. I feel like the only options right now are either the high beta Nvidia-driven swing, which is we rip back up and we keep on grinding higher, or we break down into a more higher correlation style of sell-off. The idea of...
So kind of a fancy way of saying we could go higher, we could go lower. I have no idea. This is kind of where the first thing that these guys, remember, one, it's trader focused. Thank you very much for your 7-day trading day outlook. Stocks are yellow, then sometimes they jump to green, then sometimes they jump back to red. This is kind of the model of Wall Street. This is what Wall Street thrives on. Remember, the best place, the highest yield, the highest amount of money you can make as a long-term buy and hold investor is to just hold and ignore all this crap. Wall Street, on the other hand, makes their money on the churn. That's basically money coming into Wall Street and then churning that money. And the more they can churn money, the more money that they make in the end. That's the reason why they don't care what their performance is. They don't care that they don't actually outperform dead people. They actually lose to dead people. They actually lose to the S&P, just a simple index fund. They don't care because it's not about that. Their paycheck is not bothered by that. Their paycheck gets cut when people don't trade in and out. And more importantly, there's a lot of things he just said that mean a whole lot of nothing right there. But in terms of, is it being fun? Is it mentally stimulating? Does it create a lot of emotions, a lot of other things like that? Absolutely it does. And it doesn't mean that necessarily what he said was not true. I agree. Kind of the AI trade, the semiconductor trade, whatever the heck you want to call it, has definitely been the hot trade there. But I mean, come on. But the reality is, it doesn't freaking matter. Traders are going to do what traders are going to do in the meantime. And so I don't have any need to pay any attention to this as a long-term investor, because it is simply designed in the end to get me in and out and to create churn within the markets, which is how Wall Street, hedge funds, traders, everybody else out there, that is how they make their money in the end, not based upon total returns in the end. So it's an important distinction there to understand why they would say something like this and why they want to create these herky-jerky narratives and, of course, create little pretty charts there for us with, you know, red, green, yellow, stuff like that. It all has the same intent in the end.
Rotation and the attempt to rotate outside of Nvidia just doesn't seem to add up for a few reasons. Firstly, let's look at the chart of the semiconductors versus the equal weight index, which gives us an idea of where the momentum is. It's just so powerfully in favor of the semiconductors. Obviously, the blue line, the SMH, has been a beast. The equal weight has been much more sideways. And even in the last couple of days of strength here, we did have this little pop. I mean, that kind of spread is fairly novel. We haven't really seen that much at all, which is semiconductors coming down while the equal weight goes up. That's a very unique situation over the last 4 days, excluding today, of course, in which the equal weight came back down.
Very unique situation that you can see happening a few times there on the chart, not a lot. And that's not a very far out chart. If I can't remember now, of course I should have looked earlier there. But my guess is we see those type divergences periodically. It happens. Do they last for very long? Who knows? Again, these are all trader things, and they put up these pretty charts and these graphs to distract you from the fact that I don't care about any of that. I care about there's plenty of stocks in the equal weight index that are great stocks that are undervalued right now that you should be buying, and vice versa. There's some of them that are just significantly overvalued that you should be avoiding. I don't care where the momentum is, again, because I'm not trading, but they are trading, and this is how they scare you out of great positions. The setup was exactly the same, and I'm talking pre-split here. I just haven't quite adjusted in my mind pre-split or post-split prices for Nvidia, but pre-split Nvidia, they were saying the same thing at 250, 450, and it just kept right on marching up to 1,000, and now we're well past 1,000 post-split like that. And these are just all things to get you in and out, in and out, in and out, create that churn, which over the long run, you will obviously you'll lose to everybody that just bought and hold and just added on the dips. And of course, you'll actually end up not beating the indexes in the end playing that exact game.
It's just a world of a difference in terms of technical strength. All the technical strength is in the semis. There's not much at all in the equal weight. It's going to have to take something pretty profound. The other thing, too, is that there's just still a lot of absence of animal spirits in the market outside of the AI trade. I've talked a lot about Bitcoin and how weak Bitcoin has looked relative to the rest of the market for risk assets. Stocks been making highs, and Bitcoin's just been stuck here now in the range for months. The breakdown that we got to BTC found some.
Now, of course, you kind of see his thoughts on Bitcoin there are that it's basically a measure of risk in the market. I know other folks who are really into Bitcoin. Obviously, we've got a lot of group members that are really into it. Some of them feel as though, hey, it's actually a way to take risk off the table during a downturn. Now, of course, during 2022, we saw that wasn't true at all. So it does probably formulate more into a way to at least not all the time, not perfect, but there is some correlation there that, hey, when people are more risk on, there's more money flowing to Bitcoin. Obviously, when there's less risk on, money flows away from Bitcoin. We just saw that through this past cycle there. But I don't freaking care about animal spirits. I understand it. I understand it creates these euphoric highs. That's probably when it matters the most. We're not in any sort of a time period like that. This is not 2021 all over again. This is not, Tesla at 1,000 PE. This is not no-name stocks with no revenue, no nothing, 10xing once a month. This is not that type of market there. So again, it's just something that traders like to throw out there. Traders like to use to create trading patterns, to create trading scenarios, and to kind of let you know where the next trade is. When the reality is, I don't know. It just kind of ends up being silliness at that stage.
Support at 60K. That's really got to hold, or else the chart could get really dicey. And keep in mind, this isn't even a short-term read. My read on Bitcoin hasn't even altered much in the last couple of weeks because it's at such a really key point on its long-term chart, which I pointed out resembles this kind of rounding top, which is how I think an asset with no intrinsic value would actually peak out when you just run out of buyers. The ETF was basically the last doorway for buyers to come rushing in. So now it looks like we're still potentially in a failed breakout compared to the other two previous highs that were up around 70K. Remember, the RSI throughout this entire period didn't even get above where the other one was. So we could still be in this sort of divergence, this bullish divergence. So Bitcoin telling us that risk appetite and animal spirits just really aren't there outside of the AI trade. The other thing, too, is that the bond market's telling us that we really need some good economic data. If you're going to rotate into cyclical stuff and things that depend on the economy, then you either need to have one of two things: a really strong economic outlook that's surprisingly positive, which it's not. Our economic data have been missing expectations, or you need the rate cuts. But we're not going to get the rate cuts until at least September.
I think this one may be my favorite chart that he threw up there. The reason why, and again, the expectation is so low, and the reason why you're seeing the large divergence is because there was a giant run-up based upon the expectation that the Fed was going to cut early. You got to remember, we start off the year right here on this channel. I said, I don't expect anything until we get closer to the election, and I think we'll have a couple of quarter-point cuts at best. That's just what the Fed said. That's based upon the GDP data that was coming in, and that's based upon the inflation data that was coming in that was moving down, but kind of stubborn, kind of hit a sticky point per se. In regards to that, it makes sense. Every bit of that piece lines up. But people were running with, oh, it's going to come as early as March, and then it was, oh, well, then it's going to be the summer. Hey, June timeframe, maybe July at the latest. And now people are thinking September. And I'm like, yeah, that's what I thought back 9 months ago. But the problem is when you start propping up those expectations, and then when it doesn't happen, what it does is it sends those bond yields into those weird territories where we end up more inverted than we were before because the bond yields were trying to anticipate the Fed cutting early. And then when it doesn't happen, of course, it dips down lower like that. So for me, that's you can kind of see it right there in the chart in regards to the, massive spike up there. And then all of a sudden coming back down to what the normal expectation is. So it's not a direct correlation in regards to what the economy is doing, what inflation is doing, or anything else like that. It's much more about expectations on the cut, if that kind of makes sense. Which, as we've seen, the expectations on the cut virtually never follow what the actual reality of what's going on with the economy, what's going on with inflation and everything else. I can remember people last summer in 2023 saying the Fed's got to cut rates. They got to cut rates right now. The Fed rate cuts are coming. There was nothing in the data that said that. Inflation was still way too high. Obviously, GDP was humming along. Like everything was moving the way the Fed wanted it to move. There was absolutely zero reason for that. But yet you saw that same exact kind of divergence with bonds and everything else based upon that expectation. Nothing to do with the data, nothing to do with anything else. Again, it's another thing where they take a chart, they take a data point, and they turn it into a trading point and ignore everything else. And they give you that line like, oh, well, it's showing you that, hey, this is this and that's that. We need to do this. And the reality is, no, that chart right there is based upon expectation for rate cuts or rate hikes or whatever the case is, not necessarily what the underlying data is saying, because we know that that's not how they create those expectations. In the end, that's where they end up going. So it's kind of like a destination. But in regards to where it is in real time and why we had such a huge spike up, and then obviously it trailing down as those expectations weren't met, that had nothing to do with the economy. That had everything to do with people trying to create trading narratives to push stocks up, say the Fed's going to cut early, all these other things like that for a variety of different reasons, none of which had anything to do with what was the reality or what was the most likely scenario to happen at that time. Again, it's another tool used by Wall Street with a pretty chart, a pretty graph where there's some truth, some correlation, but not necessarily causation and not necessarily the whole truth and the reason behind it underneath. They're obviously leaving that part out, or I'm not going to say this guy was lying, but he's definitely leaving that part of it out in regards to that. And again, it fits a trading narrative, which is exactly how they get you out of your money and how they get you trading in and out and trying to guess. And again, you're just not going to beat the Wall Street folks who can't beat hedge funds, or I'm sorry, who can't beat index funds, who can't beat dead people. So same exact thing. So just something to understand when you're seeing charts like this and you're hearing people talk like this.
Gives you a big gap of time here in which there's just not a very compelling case for a rotation into cyclically dependent and economically dependent businesses. The yield curve tends to twos is at the very tick low on the year. That's not good. It's not good. We're getting more inverted again here over the last couple of weeks. That is not what you want to see. The tens to twos spread contracting, telling us the economy is not in a good state in terms of its strength versus inflation. Economy's okay, but relative to inflation, it's not ideal. That, combined with the lack of animal spirits signaled by Bitcoin softness, tells us that if the AI trade dies out, there ain't much else to go on.
So I'll tell you what we need to be worried about as long-term investors here in just a second. So as you can see right there, this is kind of his hot take. I don't know, something he obviously created to try to create, it's like the Kramer lightning round or whatever that made Kramer kind of famous per se. That's kind of what he's trying to create here with this. But every single thing he discussed in that video 100% does not matter to me as a long-term buy and hold investor. Matters absolutely zero, because those same exact narratives were around in reverse when we were talking about Nvidia at its lows in 2022, or any other stock when they're at their lows in 2022. Or 2023, if they hit them in 2023, or the ones that are at lows right now. These are the type things that get us as in trouble as long-term investors, because we start looking at these big picture items, and they're twisted to a trading narrative, which I don't have any problem with that. If you're trading, then maybe this is something that matters to you. Maybe it matters to you on your call options expiring in 3 days and other things of that nature. Okay. That's where this data can make some sense. But if you're not doing and playing those games, this is the type stuff that even YouTubers, long-term buy and hold YouTubers, will use to justify a narrative on a stock going one way or another, when the reality is it only matters to traders, and it's traders trying to create trader narratives based upon some bigger picture items. And we need, as long-term buy and hold investors, to anchor down on what matters. So as a long-term investor, we don't need to worry about any of this sort of stuff. I could care less about it. What I do need to worry about, what I do need to be thinking about every single time when it comes down to Nvidia, Palantir, Tesla, doesn't matter the stock. What matters is valuation. And when you get down to valuation with Nvidia at that stage and what their guidance is and what they've guided the future and everything else of that nature, that decides whether or not you need to actually start buying more Nvidia, or do you just kind of hold and kind of wait for the next pullback on Nvidia? That to me is what's going to be the determining factor in regards to should I buy or not. Now, you guys know I don't trade, so I have no interest in trying to sell and then try to get a few more shares and buy back in. You're going to go 50-50 at best playing that game over the long run, plus incur a tax bill and a lot of other things like that. And it's just again, you're playing Wall Street's game at that stage and you're playing a losing game at that stage statistically. So I have no reason to do that. So for me, this sort of stuff, I completely ignore it. Go to your due diligence, go to your evaluation, and take a look and see where Nvidia is on that cycle, and then decide whether or not you just need to hold for now and focus on a different stock, or whether or not it's a time you want to continue to accumulate Nvidia based upon those future numbers that they put out there at guidance. Those are the only things you need to worry about. All the rest of this garbage like this is simply traders doing trading things to create a trading narrative. It'll be a completely different narrative next week. As soon as the little charts flip, or as soon as this happens, or as soon as that happens, or whatever the case is, it won't matter. The point being, it's going to be a crazy schizophrenic hodgepodge of things every week and a bunch of big words and a bunch of pretty charts that all of them in the end are just intended to get you out of your money and get you moving and get the velocity of money moving within the market, which is how Wall Street makes their money. So if you want to pay Wall Street, pay attention to this sort of stuff. If you want to pay yourself, learn how to do due diligence so then you can actually base your decisions on valuation and where the company is based upon valuation, and avoid the trouble and the mess that's out there. And, again, pay yourself instead of paying Wall Street. And if you don't know how to do a valuation, check out the pinned comment for my group, where we have one of the biggest discounts ever for my group. You get access to 5 courses that teach you that. You get access to coaching that we discuss that all the time. You can jump on a live Q&As, ask me all sorts of questions about that. Take advantage of the best 6, 7, and 8-figure Discord out there. Tons of exclusive videos. Guys, there's so much involved in the group. There's so much included. Make sure you take advantage of one of the biggest sales we've ever had on the group and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.